The new year has begun with greater uncertainty for crypto exchanges as well as the whole system. A series of GST raids shook up major crypto exchanges last week when demands were made for as much as 70 crore rupees from many exchanges. The taxman essentially thinks and believes that these exchanges have not been paying their fair share or their rightful due on the money that they've been making from crypto transactions. Now, part of the problem also stems from a lack of clarity on how exactly cryptos should be taxed. And this is confusion which has been going on for some time. To know how any service or commodity or a good is taxed, you must first define it. And here is where it gets complicated as far as cryptos are concerned. Remember, there is a bill that has not yet seen the light of day and which the government has to bring in to actually define cryptocurrencies or crypto assets, and then from there will flow the decision of how to tax them. In the interim, the trade survives and thrives. More and more people are getting into cryptos in India. The buying and selling continues, the making of the money continues, and the charging of the commissions continue. So what will be the tax structure for now, and has this action from the GST department or the taxman actually set the pace for defining how cryptos will be treated from here on? To speak on some of these issues, I'm joined today by Gaurav Dahake, founder and CEO of Bitbns. Sidharth Sogani, founder and CEO of CREBACO, joins us today as well, as does M.S Mani, partner at Deloitte India. Welcome to all of you, and thank you so much for speaking with us here on the India Development Debate. Gaurav, let me begin by just getting your view on the action that we have seen a few days ago from the tax departments and the investigations that are also ongoing as per reports, which essentially are trying to find out whether exchanges have not paid the tax that they need to.
Right. So we welcome the investigation that has been sort of happening. Most exchanges kind of follow a code of conduct and are under an association called the Blockchain and Crypto Assets Committee. There is an extreme lack of clarity in terms of how taxation should work, how reporting should work in a few of these sort of areas, and exchanges have sort of complied with most of these sort of norms. Now, it is more of an issue of interpretation rather than sort of evasion that has sort of happened with certain exchanges, where how they sort of recognize the revenue or what exactly is sort of taxable, that definition has sort of changed. And as soon as they were sort of pointed out, they immediately sort of responded in a positive manner and kind of filed for the taxes there. As of now, Bitbns has sort of received no notice around this, and we've kind of in a compliant manner filed a significant amount of tax over the last 3 years since we've been sort of operational. What we see is there needs to be a broader clarity in terms of how the asset is categorized as a commodity, or what form factor would it be, and how would the tax structure be defined for each of those sort of assets that are trading right now.
No, so my question is, can this be treated as an evasion if the party that is paying the tax doesn't really know or doesn't have clarity on what kind of tax they have to pay? Let me come to Mani here and, just sort of get your view on what has triggered this action by the tax authorities, because these exchanges have been in business for a while. Suddenly, why have we seen tax authorities swoop down? And can this be called as evasion if they just don't know how much tax they're supposed to pay? Is it as simple as that?
Okay, so the way I look at it, this is an issue in terms of, defining or interpreting the law, which is true not only for India, it's true across the world. And I mean, to be fair, I think we need to start by saying that in no country of the world do we still have clear rules in terms of emphatically saying, this is how it will be taxed, this is the tax that you got to pay, and this is the tax that you don't have to pay. Large part of the interpretation issues come from a basic issue on whether when we talk of crypto, are we talking of a currency? Because if we are talking of a currency, if we are saying it's a digital currency, in that case, a dealing in currency is clearly outside the purview of GST. Now, the problem over here is that it's not yet classified as a currency in most parts of the world. I understand there is one country of the world which is accepting it as legal tender and which treats it as its own currency. But in the rest of the world, it's merely a digital asset. So when we say it's a digital asset, the issue with the tax authorities would be, is it goods or is it services? Now, in the earlier regime, pre-2017, when we didn't have GST, we had to classify this either as a goods for VAT purposes or as a service for central tax purposes. Now, in the goods and service tax definitions, all that is not classified as goods and is not exempt is deemed to be a service. And therefore, there are quite a few people who feel what the crypto exchanges are doing is providing a service. If they are providing a service, then it falls under the residual category, which is referred to as the 18% category, where there is a tax applicable. But the larger point remains in terms of bringing clarity to the whole issue, which I guess goes a little beyond tax. It's not only to do with tax, because the tax rules can flow once we have more clarity on how crypto exchanges will operate, how investors will be protected, what are the regulatory mechanisms, etc. Once we have that in place, possibly the tax rules will also follow.
Exactly, and well put. That is what brings to the question of whether this action was warranted, considering that there is just no clarity. There is no law in place that legalizes, defines the crypto trade or protects investors or lays down guidelines for which entity will regulate the whole business or the whole scenario. But yet you have this tax action with the allegation of evasion. Sidharth, how do you look at all of these developments, and has it shaken up the industry a bit?
I don't think so. It has shaken up the industry. Most of the exchanges, we are not an exchange, we are a research company, but as far as I understand the ecosystem in India, a lot of exchanges were kind of prepared for something like this because this is something which is unregulated yet. And I think all the exchanges are paying the taxes in the maximum tax slab already for GST. And the business income is termed as, under the regular slabs. However, when it comes to the volume, that is where certain, tax authorities, not only in India, but across the globe, they have this issue because the exchanges have several markets. There are fiat to crypto markets, there are crypto to crypto markets. In that, there are several other markets as well, where cross currencies are traded, and exchanges do generate revenue if the trade happens between those pairs. Now, to tax that or to not tax that, if it's not a fiat crypto pair but a crypto to crypto pair, that is a question where the tax authorities, I believe, they look at the volumes and they say that, this is your maker taker fee. This is how you should tax it. But there are still a lot of, understanding on both ends, which has to be done before an exact tax figure arrives. So I believe in the coming couple of months, when the bill is declared, all these gray areas would be addressed, and there will be more clarity.
Yeah. Now it's anybody's guess if that will happen in the budget session, and whether the crypto bill will be a priority in the budget session. But meanwhile, what complicates it even more is that it's not like all crypto exchanges have the same business model, right? Some act as a marketplace, some act as brokers, some facilitate peer-to-peer lending and then charge a commission on that service. Gaurav, going forward, as we await some kind of formalization of this space, do you think that there will be enough territory for all of these different models to flourish and exist?
Right. So all of these models sort of are relevant for getting the industry kick-started and getting it to a critical mass. But over a period of time, right? So if you see in equities market, you earlier had a Bombay Stock Exchange, a Madras Stock Exchange, Calcutta Stock Exchange. But over a period of time, it's like the NSE is the most dominant sort of exchange, right? So in sort of a crypto exchange sort of a space, it would be that liquidity would sort of beget liquidity, and there would be one or two sort of venues which would have the highest sort of liquidity. Then there would be brokers or other interfaces that kind of just simplify the access for people to access these sort of venues. And the broker models would be sort of out there. Then there would be sort of other layers, which are additional layers in crypto, where in a simplified way, people would be able to participate in DeFi ecosystem or purchase NFTs and all those sort of stuff without getting into the complicacy of creating a wallet and having sort of storing their keys and all that part of it. So, but in terms of exchanges, there would be one or two exchanges that would remain over, say, the next 3 or 5 years, and brokers and other models would sort of continue to flourish.
No, so now going forward, Gaurav, if you can give us some perspective on what has been the impact of all of this lack of clarity, the tax action. Has it dampened enthusiasm of people from coming in, opening accounts or trading in their accounts in your experience?
This kind of would have impacted the market by about 10 to 12% in terms of new account openings and all. It is also a function of what volatility is there in the market. If the volatility is higher, there would be more people sort of opening up the account. But lack of clarity hurts on both sides of the spectrum. Like when the RBI action sort of took place in 2018, there was extreme lack of clarity in terms of what is possible, whether P2P can operate, whether this is sort of legal and all those sort of things. And we saw some of the maximum sort of dip in terms of new account openings and trading volume back then. Post the Supreme Court clarity, it became better. Now when people have seen that there is a bill getting introduced, but there's no consensus on what is expected in the bill, people are still, some of them have just kind of withdrawn their money and kind of holding it in the account, that as and when we get clarity, we'll sort of get back into the market. Quite a few of them who have kind of seen this sort of cycles over and over again have continued staying in the market. They're kind of still trading, and because they've heard announcements about the bill for a fairly long period of time. They've heard it would be introduced in a certain session a few times, and it has gotten postponed multiple times. So people still anticipate there would be a certain window before the bill actually gets tabled into the parliament. And so it is impacted by 10 to 12%, but people are exploring other avenues, like what else can they do with crypto? Trading is one aspect of it. Can they do lending? Can they do an SIP? Can they earn fixed interest on top of their crypto and all those sort of avenues? Now that makes it pretty complicated even from a taxman perspective, right? Like from a taxman perspective, my one Bitcoin, I lent it and it became 1.1 Bitcoin. What do I tax it at, right? So whether I tax it on 0.1 Bitcoin or whether I tax the dollar equivalent of it, when do I tax the dollar equivalent, whether it is today or when it was sort of realized, all those sort of complications are out there in place. And that is basically, so it has not been a case of evasion or something. I don't think any of the exchanges sort of are doing that. It is more around lack of understanding. And that is what most of them anticipate that the bill would clarify.
Yeah.
Right.
Well, so should there, again, once more, should there have been action before that clarity comes in? Mani, you know, we've been talking about how the exchanges should be taxed. But what about investors? Is there enough clarity on that? Does it just get added to income, whatever you make, if you sort of cash out and then are taxed accordingly? Because people are pretty unclear on what happens if they invest in crypto and if they make money on it.
Look, as far as investors are concerned, I think if they make some gains from crypto, they will have to pay the income tax at the slab at which they are taxed otherwise. So to that extent, there is clarity, although it is not defined as a separate activity. So, and that is very similar to anyone earning any income from any source. I mean, if you buy something and sell something and make some profits out of it, you are required to pay income tax. Now, the question in respect of GST in terms of the set of actions that have happened in a scenario, as possibly Gaurav said, where, some people were not clear and there was an issue of interpretation. But at a fundamental level, what you have to bear in mind is that anyone who provides a service is required to pay a tax. Now, when I say provide a service, if there is a commission, a brokerage, a fee, by whatever name we call it, if anyone earns a brokerage fee, commission by any name, and we can use any terminology for it, but if there is an income that a firm, an exchange, a person, a brokerage firm, an intermediary earns out of it, that is subjected to GST. To that extent, we already know, although it is not specifically defined to be kept for crypto exchanges or intermediaries of crypto. Because if we call it a digital asset, then to a very large extent, it becomes very similar to many of the other asset categories. So Gaurav was just mentioning that, it could be through an SIP route investment. It could be something which people get a fixed coupon rate or something of that kind, which means we are taking it a little close to other financial assets. And in all the other financial asset categories, the brokerage, fee, commission, income earned is subjected to a GST. And therefore, to that extent, this also should be subjected to a GST. But specific rules to tax crypto can obviously follow once the regulation on crypto is, clear.
The regulation clarity is what we come back to, Sidharth. When are you hopeful of that happening, and how crucial is that at this point?
It is very crucial, because if it doesn't come on time, we will lose a lot. Because in the last few weeks, I have seen all the new projects which are, led by Indian founders. They are planning to incorporate in other countries, but in India, because they don't want to miss the momentum, and they want to start the business because the crypto market is still growing. Yes, the bill is expected. We don't know when. Because it wasn't tabled, and as far as I understand, it is not prepared yet, so it is not ready to be tabled. Rather, what we can expect in the budget session can be some clarity on tax, because that does not require a bill, but a few statements by the FM who would address the tax structure for crypto, how the GST should be taxed, and this ambiguity
but
would be
it needs to be written into law. Yeah. But
the law would follow. I don't think we are ready for a law yet.
Flow from law. Yeah.
Yes, you're right. Yeah. You're right. But before the law comes, I think we are still a few months away from the law. As far as I understand, the bill is not addressing to decentralized finance. It is not addressing to NFT. It is not addressing to staking, which are the emerging new jargons in the space. So it has to do that. It's not defining a lot of aspects of the industry. So even if the bill comes, there will be a lot of amendments and a lot of additions in the coming years. But the first thing which needs to be addressed are the taxes.
So perhaps, a notification from the appropriate department, at least bringing clarity there, is the need of the hour. Yes.
Right. So one of the things that we need to sort of understand is we got towards the definition of the asset itself in the last couple of months, right? Before, there was not a clear consensus whether it was virtual currency, cryptocurrency. How do different government organizations recognize it, right? Like, say, RBI used to sort of think it is more competing with the sort of monetary ecosystem. It is more like a currency. SEBI used to have a different opinion. The tax authorities had a different opinion. So there was that large of a disconnect in terms of different departments, and the consensus was not sort of out there. Now that we have at least started getting towards an asset sort of a structure, that needs to be consolidated, and we need to kind of figure out, hey, if that's sort of getting regulated under SEBI, whether it gets regulated as a commodity, how do we kind of treat it and kind of move along with that. So some of these sort of broader structures need to be kind of ironed out, and then the details could be sort of coming through over the next sort of few months. But it need not be sort of directly classified that some of the exchanges didn't comply.
Yeah, should we be...
retrospectively action is taken on something.
All right. So you're saying that that would be unfair. Well, there is an investigation on. Tax notices and tax demands have been sent. They are being paid as well. And the exchange is saying that we're ready to comply. But first tell us what the structure is and what the rules and regulations are. So hopefully there'll be more clarity there as well. Thank you so much to all of you for joining us on this issue today.
Thank you.
Thank you.